Okay, so you sent this Motley Fool piece my way, and
Yeah.
it's about some of Cathie Wood's ARK Invest,
Right.
recent trades, and
Yep.
specifically during that little dip we had in the market on Monday, April 7th, 2025.
Yeah.
And I thought it'd be really interesting to kind of look at why
Mm-hmm.
these particular companies like Nvidia, Baidu, and Iridium Communications
Right.
kind of caught her eye. I mean, she's such a prominent growth-focused investor,
Mm-hmm.
and it makes you wonder what opportunities she sees when the market,
Takes a bit of a
takes a bit of a stumble.
Yeah, absolutely. I mean, market downturns can be really fascinating times to
Yeah.
see where investors with, a clear strategy see potential value.
Yeah.
And when you have someone like Cathie Wood, who is known for, focusing on these disruptive growth companies,
Right.
when she makes a move, it's definitely worth looking into it.
Yeah.
So we've got this Motley Fool article as our starting point.
Right.
And let's get into it.
Okay, let's start with Nvidia.
Okay.
I mean, this is a huge company. I
Yeah.
mean, the article even says it's the third most valuable company out there.
It is, yeah.
And, the stock has had an incredible run.
Oh, yeah.
I mean, more than tripled in 2023,
Right.
up another 171% last year.
Yeah.
But as we all know, what goes up must come down.
Mm-hmm.
And it's pulled back quite a bit this year,
Mm.
down 27% as of Monday,
Mm-hmm.
and even more. A good 36% from its peak, which was just 3 months ago.
Yeah.
So, I mean, what's the story there? Is it just profit taking after such a,
Right.
such a huge run, or is there more to it?
Yeah, that's a great question. I think, for a long time, NVIDIA was seen as this kind of unstoppable force,
Mhm.
largely because of their dominance in graphics processing units, or GPUs, for gaming.
Right.
They really cornered that market. But, I think the real driver of the growth more recently has been their leading position in AI chips.
Yeah.
And that insatiable demand, for data centers, for generative AI,
Right.
that has been this huge tailwind for them. And of
Yeah.
course, they're also in, exciting areas like autonomous driving and VR.
Yeah.
So they're really positioning themselves at the forefront of some really transformative technology.
Yeah, it feels like they're in all the right places,
Yeah.
for future growth.
Yeah.
But the article does point out that there's been this slowdown in their revenue growth.
Hmm.
We saw over 100% growth for 5 straight quarters.
Yeah. That's incredible.
I mean, astonishing, but then it moderated to 94% and then 78% in the latest reports,
Right.
which are still impressive numbers.
Oh, yeah, for sure.
But, maybe the market is kind of
Right.
adjusting expectations a little bit based on that deceleration.
Yeah, I think that's a really crucial point. Even substantial growth can be viewed in different ways by the market,
Right.
depending on, what the previously established expectations were.
Yep.
And the article does mention a couple of headwinds. Firstly, there was this news about China's DeepSeek, and they're claiming to achieve similar AI results using older NVIDIA chips,
Oh, wow.
which, kind of raises some questions about whether NVIDIA can maintain this kind of absolute technological edge
Right.
in every segment.
Right.
And secondly, we've got the ongoing trade tensions and those associated tariffs,
Yeah.
which just, creates some uncertainty about global demand for their products.
Right. So it's not just about their internal performance, but also external factors that are at play as well.
Exactly, yeah.
Okay, so some potential challenges there on the horizon.
Yeah.
But, the Motley Fool piece really emphasizes that NVIDIA is now trading at about 21 times this year's earnings
Mm-hmm.
and only 16 times next year's target.
Right.
So, for a company that's still expected to grow significantly,
Mm-hmm.
that sounds like a pretty attractive valuation.
Exactly. And I think when we connect that back to the bigger picture, even with this anticipated kind of moderation in the growth, the general consensus is that we're still looking at some pretty robust double-digit growth in the coming years, as long as those tailwinds continue to outweigh the headwinds, of course.
Yeah.
And I think Cathie Wood, with her focus on that long-term growth potential,
Right.
she probably sees this recent price correction as an opportunity to,
Yeah.
acquire a leading player
Yeah.
in a really transformative industry at what she considers a more appealing valuation.
Right.
So she's basically betting that those long-term growth drivers are going to win out in the end.
Okay, let's switch gears a little bit and talk about Baidu.
Okay.
This is a bit of a different story.
Yeah.
It is identified as China's dominant search engine.
Right.
So similar to Nvidia, they also have these big investments in autonomous driving, machine learning, robotics, AI, all of that. But, the stock's performance paints a different picture.
It does.
Down 31% from its October high, but much more dramatically, 78% down from its peak 4 years ago.
Yeah.
So what accounts for that long-term kind of underperformance?
I think that drop really underscores the different, market dynamics and growth narratives that are at play here. So while Baidu's involved in, a lot of these cutting-edge sectors, the article highlights that their revenue growth has been much less consistent. So they've only had 1 year of double-digit revenue growth in the last 6 years.
Wow.
And they've actually experienced top-line declines in half of those years.
Yeah.
So that suggests that they've been facing some pretty significant hurdles in translating, their presence in all these promising areas into strong financial growth.
Right. So given that more kind of muted growth history, what do you think is attracting a growth investor like Cathie Wood?
Yeah.
I mean, the article points to valuation again.
Right.
It's trading at just 8 times this year's projected profit and a mere 7 times the 2026 forecast.
Right.
I mean, that sounds incredibly inexpensive for a company with such a significant market presence.
It does seem very cheap, and the article kind of goes on to emphasize that by mentioning that their enterprise value, which is essentially, the market cap adjusted for cash and debt. So it gives us a better sense of, the underlying business value is actually lower than their market cap.
Oh, wow.
So think of it like this. If you were going to buy the whole company, the enterprise value gives you a better idea of what it would actually cost you after taking into account their cash reserves.
Okay.
So when it's lower than the market cap, it can kind of suggest that you're getting the core business for less than its sticker price.
Wow. Okay.
So from Cathie Wood's perspective, this could be what's called a deep value play within her broader growth framework. She might be betting that Baidu at this, discounted price has the potential to, reignite that growth engine and return to those historical levels of expansion, which would make it, a really compelling bargain right now.
Yeah.
It's almost like a contrarian bet on a major player, finding its footing again.
Right. Okay. Interesting. So it's kind of like a turnaround play, but in a company that's already a well-established leader.
Yeah, exactly.
All right. Let's move on to Iridium Communications.
Okay.
This one is, as the article says, thematically out of this world.
Yeah.
They're a specialist in data and voice satellite communications, and their stock has also taken a pretty big dip, down 35% from October highs.
Yeah.
And kind of similar to Baidu, their revenue growth hasn't been, super explosive. Only 1 year of double-digit growth in the past 6.
Yeah.
So not quite the same, high-flying growth as Nvidia or even, Baidu's hoped for resurgence.
Right. Yeah. The growth story here isn't as, exciting as the other two.
But the article does point out some positives.
It does, yeah.
They've seen an 8% increase in their billable subscribers, reaching 2.5 million.
Right.
They've been profitable for the last 3 years.
Yeah.
And they even started paying a quarterly dividend a couple of years ago.
They did.
Which, now with the stock pullback, is yielding a pretty decent 2.4%. So this sounds a little bit more like a mature, maybe more stable, type of business.
Right.
The article mentions that analysts are expecting continued single-digit revenue growth.
Yeah.
Despite, facing some increasing competition in that satellite communication space. And their valuation at less than 18 times next year's earnings is actually higher than Nvidia on that metric.
Right.
So what do you think the appeal is for a growth investor in this case?
Yeah, I think this raises a really interesting question about, how we actually define growth in different scenarios.
Right.
So while the revenue growth might be slower compared to those other two.
The fact that they have, this established and growing subscriber base.
Right.
Their consistent profitability. The dividend. That signals a degree of stability.
Right.
And potentially predictable cash flow.
Exactly.
So maybe Cathie Wood is seeing a different kind of growth story here, perhaps one that's more focused on a, reliable but slower expansion in this niche market, coupled with consistent returns through profitability and dividends.
Yeah, for sure.
So for a traditional high growth investor, single-digit revenue growth might not seem that appealing.
Yeah.
But it seems like Cathie Wood is looking at the overall financial health and that potential for steady long-term value creation.
Exactly. And especially after a significant price correction like we've seen,
Right.
that dividend also offers, a tangible return while they wait for further growth.
Right. Okay, so let's try to put it all together here.
Yeah.
We've got these three distinct companies, all picked up by the same, growth-oriented investor during a market dip.
Right.
What's the connection? What ties these choices together?
Yeah, I think the most immediate connection is that all three companies experienced these pretty significant stock declines, roughly about a third, from their recent peaks.
Yeah.
So that really suggests that, the market sell-off was that initial catalyst that brought their stock prices down to a level that Cathie Wood considered, attractive entry points.
Right.
So it seems like that market correction created this opportunity across the board.
Yeah, but the reasons for that perceived attractiveness seem to be quite different.
They do, yeah.
We've got Nvidia with its potential for future dominance in these key technological areas, despite that recent slowdown in their growth.
Yeah.
Baidu with its deep discount in valuation, even though they have a presence in these, crucial Chinese markets.
Right.
And then Iridium with its, established profitable business model, paying a dividend even if they're on a more modest growth trajectory.
Exactly. And I think Cathie Wood's decisions really reflect this belief in the long-term potential of each of these companies, but for very distinct reasons that are aligned with their, individual circumstances and their market positions. So it's not just this uniform, buy the dip strategy.
Right.
It seems to be much more targeted based on her specific growth thesis for each one.
Yeah, and those contrasting growth and valuation profiles also suggest that maybe this is a diversified strategy, even within her overall focus on growth.
Yeah, it's a good reminder that growth, can manifest in different ways across different sectors and different stages of a company's life cycle.
Right. Okay. So based on all of this, what are some key insights for someone like you listening to this?
Right.
I mean, what can we take away from looking at her choices?
Yeah, I think what's really interesting here is how a prominent growth investor navigates this period of market weakness.
Right.
So it's not just about chasing those, hottest trends. It's also about identifying those companies whose long-term potential might be, temporarily obscured by all this volatility or by company-specific challenges.
Yeah.
And that can lead to some pretty favorable valuations.
Yeah.
So it really underscores the importance of looking beyond just that historical performance and considering those fundamental drivers, the future prospects, and then the valuation relative to that long-term potential.
Right. That's much more nuanced than just buying every single stock that's gone down.
Exactly.
Yeah. Okay, so we've really explored all the details of Nvidia, Baidu, Iridium Communications. Yeah. What stands out to you most about these decisions? I mean, does this focus on, potentially discounted future growth, that deep value proposition in specific sectors, or that stable profitability with a dividend? Which of those resonates most with you and your understanding of, investment opportunities?
Yeah, that's a really thought-provoking question. I think for me, it's the diversity and the selection. It highlights that even within this growth-oriented philosophy, there's room for different risk profiles. Different timelines for potential returns. So it really makes you think about all these different facets of what constitutes an attractive investment.
Yeah, absolutely. And hopefully this deep dive has provided you, our listener, with a better understanding of how a well-known investor is approaching this, shifting market landscape.
Yeah.
It's a good example of a specific investment strategy in action. And, something to think about as you evaluate your own approach to risk and reward in the current environment.
Exactly. Yeah.
It really illustrates that, investment decisions are complex.
Yeah.
We've got past performance, future potential, and present valuation. All these things are pieces of the puzzle.
Yeah, for sure.
So thanks for listening.
Thanks for having me.